Morning, it's a new day, it's a new month. It's Thursday, the 1st of June. Yesterday, the House passed the debt ceiling bill, which means it goes to the Senate next, and it looks certain to be sorted out now. It would be ridiculous if it got passed in the House and didn't make it. So the focus now becomes on what the Fed is going to do mid-month. We've got the most important days this month are right in the middle of the month. So the next inflation data is the CPI on the 13th of June, and then on the 14th of June we've got PPI and the next Fed meeting. Now I had thought that with the debt ceiling deal done, that this kind of moved an obstacle for the Fed to continue hiking so that they could continue hiking. However, yesterday we had some Fed speakers that kind of put the dampeners on that and have made the jobs numbers tomorrow less important. So Federal Reserve officials are signalling that they plan to keep interest rates on pause or steady in June. Governor Philip Jefferson, he is nominated to be the next Fed chair, and he often echoes Jerome Powell's views, and he's kind of seen as in line or as someone who in sync with Chairman Powell, and he indicated that they were likely to skip June and pause. And there was one other Fed speaker yesterday as well that kind of I think it was Philadelphia's Fed Harker. He's a voting member, and he also said yesterday that he backed a pause in June. So that kind of puts us into the kind of doldrums of summer a little bit, because a pause, is not the same as a we're done, or, inflation's going down. It's just, let's wait and see, and puts us back to being data dependent again. So those CPI numbers, those PPI numbers, if we got a really big CPI number right the day before the Fed meeting, or the first day of the Fed meeting, that might change their view. The other thing that could change their view is in the jobs number tomorrow, is the hourly earnings. Now, at the moment, last month, it was 0.5, which is 6% annually, and it's been kind of there or pretty close to that for quite a long time. It's forecast to drop to 0.3. If it's higher than 0.3, or if it's 0.5 or higher again, I think that also might make people think that another Fed hike is needed. So, but that's all tomorrow. For today, we really don't have much news for the US. We have the weekly and jobs numbers. They've been in line for so long. I'm not expecting a surprise in those, although, weakness in the jobs market would be one of the things that would make the Fed stop. We've got the US ISM manufacturing PMI. That's been under 50. For quite a lot of the world, manufacturing has been less than 50 and services have been above 50. It would be interesting to see if that trend continues. We've also got another Fed speaker. Fed Harker is speaking later in the session as well. The big focus in Europe, of course, is CPI. They have come in line. 6.1 is the flash estimate for the Eurozone. So still got inflation, but not quite as bad as it was in Europe at the moment. So that kind of makes it a bit of a non-event. Seasonally, June, they don't say sell in May and go away for nothing. Let's start with this monthly candle for the S&P. You can see we had a proper pause month, though for me, from this high to this low, holding above this 50% that held us down for 4 months means that we likely have more upside. If we're going to do a bearish ABC rally here, my target's 42.58 and towards that 61.8 level. However, if the Fed really do pause, if it really does look like inflation is coming down a bit, if the deal gets done, if everything calms down, but everything is still roaring ahead, I would not be surprised. So many people are calling for recession and a market sell-off. I wouldn't be surprised if this S&P climbs the wall of worry and continues to 4,500. But for now, 42.50 to 4,300 is resistance. And I think that when we get up there, we are likely to see what happens. When I look at where we are in terms of moving averages, everything looks really bullish, you know. I know we're having a little bit of a pullback week, but it's a pullback week in an uptrend, and it's not new lows, is it? If we look at our daily chart here in the S&P, we're holding the 20 moving average. Now, the first day of the month quite often is bullish, especially if we're in an uptrend. So I would not be surprised if this uptrend continues. When I look short term, looks like we've won 1, 2, 3, 4. This 5 looks truncated, double top, and we've done 3 waves back. So holding these moving averages and another leg higher wouldn't be crazy. If we only get halfway back into non-farm payroll, I wouldn't be surprised if this is a bigger 3-wave correction. Our moving averages here on the 4-hour are flat. That means no trend. That means, for me, the way I trend, you have to go to a lower time frame and you trade level to level or signal to signal, because it's not a big, you're not going to get a big trendy swing move that keeps going for days and days. And it's possible that we may need to get tomorrow out of the way. What I'm watching here to see if we see more downside here on the hourly. See how these moving averages are all lined up bullish, and this is looking like quite choppy and overlapping. It may be that we do one more push lower and need to retest these lows to be going up again. Today could be, I don't expect a collapse day, but it could be a little bit of a sideways day. It is quite disconcerting how many people are calling for a collapse in these markets. Now, another way to look at where we are with fibs is we've bounced from a 50%. So that's a correction, and quite often what you see with when you are coiling up. Now, normally if you have 50% one-way markets that mean revert tend to keep mean reverting. So our key resistance today, short term, in this S&P is 50% back from this high, which is at 4,208. And when we get back there here on this hourly, that's kind of not perfectly our ABC, is it? Is that a little bit higher? 4212. Sometimes when they don't line up perfectly. Anyway, 4208 to 4212, that zone, I think, is where our important resistance is. If this is just a bounce in the S&P, another simple way to look at it without fibs or measuring or projections or anything else is simple swing highs and swing lows. This is the last swing high before we went lower. That's our resistance. If we close above that, we're on our way up again. This pullback is over. I think the first time back to it, we're more likely to see a little bit of a pullback, and then we'll either make a head and shoulders pattern and push higher, or that will be us and we're on our way lower and we would be looking for a breakdown. So squeak higher, 4212, important resistance for the S&P. I don't know which way it's going to go. We've coiled up all our moving averages. We're at a 50% retrace. We're a little bit sideways. We've got a lot of Fed speakers. Let's see which way this ends up. I'm not sure any of the US data, like, you know, employment numbers, unless they're really out of line, are going to move the market. Let's take a look at the NASDAQ, which has been so massively bullish. If we look at this on a 4-hour, to me this looks like a bullish move. I thought we could go lower. So far, look, it looks like 3 waves down, back to the 4-hour moving average. This is a 4-hour buy. Now, we know we're in trouble with a 4-hour buy like this, setting up, if we can't make a new high or if we make a lower high. So if you're day trading this here on this 15-minute, we flipped our 15-minute moving averages. We flipped this last swing low. I think we've got some resistance here at 14,367. But for me, this swing high here that led into this double top, this is the key kind of resistance on the day. And I would expect that to be also around a 50% retrace level. there it is, 14,410 then, this swing high. I think that we could very easily tag that level. If we held above it, clearly we're on our way up again. So short-term trading by pullbacks, watch for resistance at 14,410, and then we'll see if we can break into our next leg higher. Bigger picture here in the S&P, sorry, in the NASDAQ, we're sideways at a really big level for me. Every single other one of these fib retrace levels, from the high that we made in at the end of 2021 to the low that we made in October 2022, every other one of these fib levels have gotten us a reaction. 236, 38.2, the 50% was support. So holding underneath this 61.8 could point to a bigger pullback and back to this swing low at the start of this month. So that's what I'm looking at. And the NASDAQ holding above 14,367 does point to 15,400 and a much bigger move. I wouldn't be surprised at this point. You know, start of the month, not everyone knows which way we're going to go. There's an awful lot of bears out there, and there's a lot of... I wouldn't be surprised if we don't go sideways for a little bit for the start of this month anyway. And again, if we find resistance at 14,367, I wouldn't be surprised if we have a bigger pullback to start this month before we continue higher in this NASDAQ. You can see RSI, daily RSI, we're really quite overbought territory. Back to this previous swing low, wouldn't damage the trend at all for the NASDAQ. If we take a look at the DAX, we had a pretty nice bounce from this support. Yes, let's take a look at our monthly, how we did with our monthly, because this was a little bit of a warning, this monthly candle. Monthly bearish engulfing resistance. You know, monthly bearish engulfing candle means that we are likely with this rally to find resistance and potentially see another swing lower before this correction is over in the DAX as well. We can count 5 ways up. This previous swing low is obviously our trend support, and that's also the neckline and a really good pivot level. So if we were to have a bigger summer pullback here in the DAX, I would not be surprised at all if we come back to this 14,600 and this swing low. For now, this is a weekly chart. We've got a few weeks. For now, what I'm looking at is how we're holding underneath these daily moving averages, which we did before. When we hold them for support, we tend to keep going. Here, when we got underneath them, we needed to get back above to say we were going up again. So we need, for me, to be going up again after a 3-wave correction here in the DAX. We need to get back above these daily moving averages. And so for me, that would be the daily 20 is at 15,900. But I tell you what I really like to do. I want to see a close. You know, 50% back of these monthly candles very often give you quite a good entry. They're not a trade signal on their own, but if we were to, let's go back here to the daily. If we were to close today above this daily 50 and more than 50% back of this daily candle, which it looks like we could, especially if the US market becomes bullish, I'm going to say, you know, this swing high and back to the middle is probably where we come. That's 50% would be 16,000 for this DAX. So if we hold above 15,820 today, I think we continue higher to 16,000. Now, the DAX absolutely loves a 61.8 fib, more than any other fib level. So although this 50% might be a wobble, I think that this 61.8 and this previous swing high, which is at 16,098, is more likely. So here on these lower time frames, we're looking for pullbacks to hold support to keep going higher. And, you know, little 3-wave pullbacks. If we look at this on a 15-minute, a little 3-wave pullback and another leg higher. Here would be what we would want to see. But this DAX is going to do, once the US opens, the DAX does what the US markets do. And short term, you know, we're getting we could afford a bigger pullback. Let's take a look where we are on the FTSE. Now, yesterday was pretty unfortunate with the way that we lost the daily 200 moving average. When I was looking at this in the FTSE, I always thought that we had further to go, and the first potential support was 7,416. We're still not there yet. So even if we bounce here in the FTSE, I still feel like we've got further to fall. If we bounce more, we're likely to back test this 200 moving average from underneath. You can see previously this 200 moving average is either really sharp support and resistance, and when we get underneath it, as we did here, 3 days underneath it before, it can be, you can see here, usually first time back to test it from other side results in a reversal. So a decent bounce here in the FTSE means that we've got quite tough resistance at 75.26, and staying underneath it keeps us heading lower. So here on this lower time frame here, when I look at an hourly in the FTSE, if this is our first leg higher, even if we do another swing higher here in the US Open, this 75.30 becomes really important resistance short term. Back above it, hey, happy days. We could come all the way up here at 8,000 and retest these swing highs, double top support and resistance. But for now, still in a downtrend whilst we stay underneath that level and that daily 200 moving average in the FTSE, and further to fall. I wouldn't be surprised if this level doesn't hold. If we come back here in a bigger summer pullback, it's all about whether that happens, and I really do think that the leading indicator for whether we're going to get that or not is going to be this NASDAQ, and whether it, we do that bigger pullback. So that's what I'm watching in these stock indexes. First day of the month isn't usually when it happens. Sometimes it is. Very often, though, for the month, the high or the low for the month is made on the first couple of trading days of the month in a trendy month. Let's take a look at where we are with this dollar index. Now, when I looked at this dollar index, as you know, I think we're in a big three-wave correction, ABC. I think we're headed back to these highs at 105, and holding above the 61.8 would be quite bullish so far. When we've back tested it, which we've done twice, it's held as support. So looks like we're coming back to test it again to start the month. A weekly close underneath 103.9 would be point to potentially what we're being done here. But I kind of think, especially with corrections, and especially because they're quite often 5 waves. So this would be 1, 2, and we've done a big 3. I would expect some sideways and then one more push higher before this is over. So this is all pointing, we've already gone sideways, haven't we, for 5 days. This is all pointing to more sideways in the dollar. And a bigger pullback underneath 103.9, potentially back to 102.9. So we would have a nice move higher in assets if that happened. So there's our trade between these two levels. What does that mean for the euro? It means, which is such a big component. Let's put regular candles on here. Here we are, choppy sideways. It means that we could have a bigger bounce up to 1.07 potentially, and potentially 1.08, but I think 1.07 before I'm looking for this euro as well in a bigger 3-wave correction going on here to continue lower. One of the ways I'm not sure, I like to use fib levels. And these seem to be working really well in the euro. And the euro really likes a 786 fib. So let's take all these away. And you can see here, from this low to this high, we're bouncing from a 786 fib. That means that the 61.8 is our important resistance. And look, we bounced from it, we haven't been able, this 61.8 is now resistance. Now we can have a peak above 1.073, but if we were to close above it, then we would have a bigger swing correction underway, and we would be looking for that 38.2. So this, would be our bounce, counter trend bounce move in the euro. So we would be long above 1.073. Target would be 1.087. As long as we go sideways and we stay underneath this level, the path of least resistance is lower. And looking for that bigger ABC, not too much lower, but eventually, we really want to say just high to this 200 moving average, I think. And so I could see that happening around mid-month, around the Fed time as well, especially if the Fed pause or inflation eases, then we could see the dollar sold and the euro rally. That would be quite good for risk assets. So bigger correction, choppy sideways correction going on here in dollar yen. This was a big level for me. As you know, I said yesterday, we've got really important support from this 200-day moving average and quite important resistance at 1.3977 that we may have overshot. So I'm waiting to see what happens here. Clearly, we will have held this level and be turning higher if we can make a nice little inverted head and shoulders pattern. That would be a buy. Then we'd be looking to retest the highs, and then we'd be on track for our target at 142.5. That's what I'm looking for in terms of if we were to break down, then obviously a bigger correction. Not sure which way this is going to go. Typical month end, beginning of the month, sideways price action in the dollar yen. So that's where we are with those. One of the ones that's bouncing quite nicely, which makes me feel a bit better about stock indexes, is the Aussie. Just going to move my fib. So one of the things, I always look for is flipping lower time frame moving averages. And that's what we've done here in the Aussie with these hourly moving averages. So again, this suggests bigger bounce. Key level for this month, 0.654. That's the hourly 200 moving average. It's this hourly previous swing high. This is going to be our bull bear line. If we stay underneath it in the Aussie dollar, we're still going lower, but if we can get above that, we've got a bigger bounce underway. Short term, I think we've got a date with 0.654 in the Aussie dollar. Let's take a look at our daily. Here we are in this downtrend. So the key question is this a level that we can make a low at? Let's measure our swings that we've made here in the Aussie. Because if we do this, you can see potentially it is. It's not quite, but it's pretty close, isn't it? 0.645 was our first potential support for another swing higher. We haven't quite tagged it though, which kind of makes me think, are we going to do one more push lower in this Aussie dollar? Make sure I've drawn it right. Clearly, back above 0.655 would be bottom and a much bigger bounce. And we can talk about a bigger daily bottom there. That's what I'm looking for in this Aussie dollar. Canadian dollar is also quite a good leading indicator. And here we are in the middle of a weekly wedge, sideways. This one, gosh. Yeah, potentially we've gone 1, 2, 3, haven't we? When I look at this though, I think, again, one more push higher in the dollar. And so that would point to one more push lower in that Aussie, because, I tell you why, because one, we haven't quite reached our equal measured move level in this Canadian dollar. So I'm looking for 1.354 to be support and one more push higher to 1.368. And I'm wrong if we go underneath on a daily close, 1.354. And then we would have 5 waves, I think, or a better looking 5. 1, 2, 3, 4, 5, and potentially we go higher to the top of this wedge or triangle that we are in. We've got three touches really on the bottom, haven't we? And 2 touches on the top. So this is one of those trend lines where I would expect a false breakout and then a pullback before we break out for real, and potentially, if this is a triangle, a whole nother swing lower. So look, 1 A, B, C, D, E, you know. So that's where we are with the Canadian dollar. Important support then at 1.354 today for another push higher, and that's also the daily 20 moving averages. These moving averages are just crossed bullish. Everything's lined up for us to go higher in the dollar Canadian. I'm just going to take a look at oil. They just announced today, it's a bit of a bearish move at the moment. They just announced that it doesn't look like OPEC are going to cut anymore in the next meeting. If I put my daily candle on though, we're at again another wave forward position. I tell you why. So if this is our first swing lower, which we measure high to low, project it from here, we've reached that 1.618 level. So that usually indicates that wave 3 is complete, and we've got 1, 2, 3, 4, 5 waves down here. So now I would expect some sideways price action for a wave 4, similar in scale to this wave 2, before we do one more leg lower. Where's our one more leg lower going to end up? Well, the crude oil's favorite fib level is a 786. So that would be here at 66.2. So I'm thinking start of the month, bit of sideways action, maybe a wedge triangle, and then one more push lower, and we'll see what happens here at 66.2. So that's what I'm thinking with oil. Now this bounce higher could even get up to these swing highs, but short term bounce again, one more push lower down to 66.2 for me in oil. And I really do see similar kind of thing going on in gold. For example, let's take a look at where we are on the daily with regular candles. See how we've done 1, 2, 3, 4, 5 waves down. So this previous wave 4 is going to be our resistance, and we've got a bearish cross of our daily moving averages. So although we looked at these yesterday, we said, you know, unless we get above these daily moving averages, particularly this daily 50, we're still in a downtrend. And unless we can get above sort of 1990 in gold, which is this swing high, we are still in a downtrend with a bearish cross of moving averages. Now, because we've got 5 waves down, and potentially this is a wave 1, we could go beyond here. We could do a big one. We could even we could go all the way and make a nice big double top here in gold. So, and when I look at lower time frames, we've just flipped our 4-hour moving averages. So that does point to us having another go. We're holding these 4-hour moving averages. I don't think it's quite a buy. It actually looks like a pretty nice hourly buy, doesn't it? So I like gold to go higher today to 1981, potentially 1990, and then above there we would have potentially a bigger swing and this correction over. Then we would look daily 50 next target, which is 1992. So 1980 first target, 1992 second target. Let's see if that's also the 50%. And we'll go level to level here. That's the 38.2. Yes, it's not, you know, these bearish moving averages don't say bottom yet, but if we could start getting above kind of 1992, we can talk about a bigger bounce and see what happens when we retest 2034. Looking quite bouncy. So, by the way, is silver. Now, we were looking at silver. I like how we've flipped our hourly moving averages. We look like we've got more upside, and so we're going to look for this swing high next. We need to do, the most important thing to do though, is to check where your daily moving averages are, because first time back to them, they're going to be resistance. So first time back to this daily 20 moving average, and this swing high here, let's see where that is. around 23.85 is going to be our first trouble level. So if we can break out today in silver, if we get a bigger pullback in the dollar, this will help. Silver's really sensitive to it. Then yeah, potentially more upside, at least 23.9, and then we'll go level to level, 24.15 and so on. I think then these, you know, the daily 50 really. What price is the daily 50? 24.42. That's going to be our most important resistance in silver. And you can see silver pretty sensitive to this daily 50 on bigger pullbacks and bigger bounces. So counter trend to start the month, be choppy again, be defensive, trade level to level, and let's see where we go. I'm just going to look at Bitcoin futures. Here's our monthly candle, this bearish engulfing. It gives us a really nasty bearish tone to the month. The good thing is, and this is what's quite interesting, you know, monthly candles don't give you very good signals, but they can give you really good levels to trade off, especially when you get big move months. 50% back of those big move months, a really great level to trade. So for example, this low to high here, let's put that 50% on, see how that worked. You can see that was exactly the high, 25.23, and the high for this monthly candle was 25.270. So, gosh, how close is that? So 50% of this monthly candle, perfect resistance level to get entered to continue lower. And we saw that here as well. So for example, see this big green up candle, 2 months later, 50% back of this candle would have given you a really good entry to get long. 19,965, and look where we came to. We can see here it is on the weekly. So how did that monthly level work here with this low to high? Perfect. Look, that was the low, 26,001 here. We're looking at the futures chart ahead of the open. You can see, look, this was a pretty nice double bottom, wasn't it? So we know that if that breaks, clearly we're in a bigger reversal. But if we go back to our monthly, having had now a big monthly down candle, on a bounce, that monthly 50% level is going to be really important resistance, 28,345. So if we get a really nice bounce here in Bitcoin, which we could do, or if, you know, see how we've had one swing level higher, pullback, 28,345 is really important on a retest to see what happens there. So Bitcoin short term, I have to say, I feel like we're still in a downtrend. When I look at this on a 4-hour, using these 4-hour moving averages, you know, now means we're in a little bit of trouble if we can't get back above them. So I would say short term, let's take this off. Everything could bounce. Here we've got this swing high, so 27,420 becomes really important resistance, and above 27,420 we could see a much bigger bounce up to that 28,500 and zone, and that 50% monthly retrace and back to these highs. For now, if we stay underneath 27,430, still headed lower, and the bottom of our range is 25,830. With 5 waves down now, it looks pretty close to 5 waves down for this swing. Look, 1, 2, 3, 4, 5. I wouldn't be surprised at all to see that bigger bounce and back to these highs at 27,400. And we'll see what happens there. Start of the month, first couple of days, it can be really tricky. Trade very carefully, go level to level, short term, and we'll see how we go. Okay, hope that's useful. I will do a bigger crypto update later.